Hi there, this is training video number 5, using the correct amount of leverage. Now, it's quite known in the industry that there's a varied amount of brokers out there that offer different amounts of leverage. Now you can get offered 20 to 1, 50 to 1, 100 to 1, 200 to 1, and as high as 500 to 1. That's insane. Now, a lot of these are discount brokers that offer sort of very close to zero spreads or very tight spreads purely because they're B-booking. Now, there's nothing wrong with B-booking. That just means that the broker takes your trade. If you lose, they keep the money. If you win, they pay you out. A lot of brokers mirror new clients' trades for the first sort of 30 to 50 days, and if there's a pattern and if the client seems to be losing a lot of money, they put them on the B book, and they think, right, this client's going to end up losing all their money, we'll just B book them and keep all the money, instead of putting the trade into the market and just taking a commission on the trade, just like with a standard stockbroker. When you trade shares, you just get paid a commission. So you really want to be trading through a company that doesn't B book, that just makes money when you trade, just make money on the spread. So there's an honest spread, and they just make money on that spread, and that's with Infinox. We're just making money on a spread. Say, for instance, 1.8 year on euro yen. There's a 1.8 spread. A certain amount will go to Infinox, and obviously a certain amount will go to the market. Now, the leverage is like this. For instance, this is 50,000. We know why we trade the demo for this purpose. This is a 50,000 account. Now, if I'm to trade one lot on this trade, for instance, now I'll buy this here. I'm looking at buying the euro just shortly anyway. This one lot is $100,000 on average in the market. Now, if I'm trading pound dollar, it's pretty much $100,000 per lot, precisely. Now, if I'm trading other pairs that are not as denominated in pounds or dollars, like euro yen or dollar CAD or dollar yen, it does vary slightly. So it's not always a rule of thumb. It's not always $100,000 per lot, but that's roughly the guide that is used in the industry. So, for instance, $1 a lot. Sorry, one lot, I should say. Excuse me. It's very late tonight, guys. It's 1 a.m. in the morning, and I'm going through these charts as a bit of homework ready for tomorrow. Now, one lot we've got, and that's $100,000 in the market. Now, if there's a $50,000 account, then that's a leverage of 2 to 1. That's what is meant by leverage of 2 to 1. Now, if I'm to trade two lots, then I'm going to increase that to $200,000. That means I've got the ability to trade on $200,000 worth of currency. Okay, remember, this is a $5 trillion a day industry, and that gives you the amount of control up to $200,000 in the market. Okay, now that's two lots, so that's $200,000. So that's a 4 to 1 leverage. Equity 50,000. So what if I was to do 5 lots, for instance? What would 5 lots be? Now, 5 lots would be 10 to 1, because it would be 500,000, give or take. Maybe with euro yen it's probably around 450, but we'll say 500,000 for the sake of the demo. Then that's a 10 to 1 ratio of leverage. So you leverage 10 to 1. Now, in this case, in times when it can come in handy and come in very fruitful is in times when the market goes on a rampage or goes on to rally up through the moving averages. There's a buy signal. You may already be in profit on half a lot or a lot, and you think, you know what, I'm already in profit, I want to buy some more. So you leverage up. That's what is the term. You leverage up. So you add more to the trade, essentially taking more risk That's what that means. So you maybe add another lot. So you're already in 100,000. So it's one lot, 2 to 1. You add another 2 to 1. Maybe then another lot, another 2 to 1. So you've got 3 lots outstanding. Sorry, you've got 3 lots in the trade, all placed at different times in increments. That's 300,000 you're controlling, and your leverage 6 to 1. And that's that. Now, I've traded as high as, I'll be honest, 50 to 1 before now. I don't really go over 10 to 1 anymore. 10 to 1, 10 to 15 to 1 is about my maximum. So say, for instance, on a $5,000 account, that's probably, you're looking at half a lot, because then that's a $50,000 amount you're controlling. So it's a $5,000 account, you would trade 0.5 lots. So that's roughly $50, sort of, sorry, $5 or $4 for Euro Yen per point with a $5,000 account. That's not bad, because then you've got a 50 pip stop. That's around 200, 220, maybe as high as $250 risk, which is 5% of your account. So again, that's a 10 to 1 leverage, because it's 0.5. You're controlling essentially $50,000 in the market. You've got a $5,000 or 5,000 base currency in your pot. Then that's 10 to 1. So if you're going to trade, obviously one lot, that's 100,000 again, and you've got 5,000 in your account. That's 20 to 1. All right, 20 to 1 leverage. I wouldn't go any higher, guys, than 20 to 1 maximum. Okay, you get some brokers offering 100 to 1, 200 to 1. It's just insanity. I know hundreds, literally hundreds of people, trust me, even ex-students, hundreds of them that have gone on to place 50, 100, 150, and even above 200 in leverage, 200 to 1 in leverage, and have ended up burning their account within the first couple of weeks, and it's no good. You stick to basics, keep your risk parameters extremely low, and just, you're trading the right strategy, the numbers are in your favor. Do not risk essentially absolutely maximum 5%, but to start out, risk less than 1% when you first start out on your trading. So if you've got a $5,000 account, you know, you're just risking $50, maybe $100 maximum, and that's it. And you work your way up in tier as you get more confident, as you get more experienced. Then you can maybe build from maybe 2 to 1 leverage up to 5 to 1, then 10 to 1. And as I said, I rarely go over 20. I'm more in the 10 to 15 to 1 leverage right now, which means on a $50,000 pot, I would trade maybe an 8-lot trade, which is 800,000, and that's a 16 to 1 leverage. So $8, that's roughly, on Euro Yen, it's about $70 a point. $70 on a 50,000 account, it's not terrible. If you were $20 there, 20 pips I should say, stop loss, and you got stopped out, then you know you've lost about $1,500 or whatever on a 50,000 account. That's not horrendous. And but that's again as high as I would probably go, and that's 16 to 1 leverage. Again, 15, 20 is probably the absolute maximum I would go. So again, bear that in mind. Start out extremely small, but I think it's more important to start out for real than it is demo, purely to get that real raw experience in, and those lessons learned from the off. Because you can live in a demo world forever, but it has to be extremely small, guys, to start with, because you have to get that experience. If you're more experienced from the start, then fair enough, you're more experienced. You may even be a professional trader. We do cater for many professional traders at KTA. So again, you can do this and go 10, 15 and above from the off, of course, if you feel comfortable and you've got the experience. So that's that. I'm mainly aiming that at more novices than anything else. So again, guys, you know where I'm at with that. Take care out there trading. It's a harsh environment, and again, just wanted to be clear on that amount of leverage and what that entailed. Thank you very much.